Today's Talk About It Tuesday question is, what are we looking forward to under the Trump administration this term? Well, let me say this. I don't know what you're looking forward to because of this term, but you should be looking forward to making plenty of money under any administration because it's not so much the administration, but how you play the game. And I also want to say anybody who tells you they can accurately predict exactly how a president will act, how much of his agenda he will be able to push forward, and the real impact that will have on your ability to make money is probably lying to you. There's no one who can make those type of predictions with certainty. What I will do is talk about his proposed agenda and certain factors, whether we're talking about economic, political, and social factors that could possibly impact your investing, and possibly some strategies that will be beneficial for you if these things come to fruition. So the biggest thing Trump is talking about in terms of an agenda affecting the economy is trade policies and tariffs. And most people don't really understand what a tariff is. I suggest that you really Google it and get into it, but it's really a tax on imported goods. And the tax is not paid by the country. It's not paid by the manufacturer or the seller from the foreign country. It's paid by the buyer. So what it basically does is eliminate competition for American sellers because they don't have that added tax. So how will that possibly impact your investing strategy? It could possibly take competitors out of certain industries, which means that American companies with less competition should do better. So as an investor, it's a whole different deal as a consumer. But as an investor, then certain American companies in certain industries like manufacturing and steel and things like that could possibly be very profitable for you, at least in the short term, right? At least in the short term. So there's that. That could, though, affect foreign relations and trade relations and create a supply chain issue for other industries. So in the tech industry, it could become problematic because if you put tariffs on China and then China then has some other economic sanctions that they put back on you, it could impact the ability to import parts from China or even get things manufactured in China that are needed for other industries. So companies that are very dependent upon the countries that we're putting tariffs on, and he's talking about a universal tariff, it could really impact trade relations with Mexico, Canada, China, who are our biggest trade partners. So you might want to move towards domestic stocks if you're in the stock market. You might want to look at companies that are not heavily impacted by the global supply chain, and companies that would be would remove competition so that they will do better. We can talk about tax policy. His proposed tax policy is corporate tax cuts. Again, not going to talk about how that impacts you outside of that. But if you're a business owner, obviously, then you're going to get you're going to be able to keep more of your profits if he does corporate tax cuts, if you have the right structure, right? So most people, for some weird reason, think that if you're an individual, you can't have a corporate tax structure, but you absolutely 100% can be a single person, and you don't have to be an S Corp. You can be a C Corp, right? So definitely benefit if you're a business owner. Also, that means that many industries will be able to keep more of their profits. So we talked about tech industry being affected by supply chain. If they're not affected by supply chain, just in regards to the tax cut, means that they make more money. So if they make more money, then they can put more money into research and development and back into the company, which means that they can also expand and have better products and services faster and grow as a company. It also means that companies that pay dividends perhaps can pay a higher dividend because they're paying less in taxes and they keep more profits. So those are the things you should look for in terms of the tax policy. Another policy he's talking about is deregulation. So deregulating certain industries in finance and energy. Not going to talk about the impact on the environment for deregulating energy. You're talking about as an investor. As an investor, then energy companies will probably prosper. And I'm talking, when I say energy, I'm not talking about the new carbonless energies. I'm talking about old carbon energies. I'm talking about oil and gas and things of that nature. Not solar power, not right. So green energies out, fossil fuels in terms of as an investment. Also, when we're talking about deregulation in the financial industry, so banks can lend probably more freely, like way back in the days when a lot of people took money they shouldn't have taken, but it will allow for the growth of business. It'll allow for the growth of the real estate market because banks will have less regulation. And again, I'm not going to talk about the impact that it'll have on people on the bottom who will be affected possibly by the deregulation, but as an investor, there'll be more money available for you to borrow. There'll be more money for businesses to borrow. There'll be more money to go into real estate if they deregulate the financial industry. Monetary policy. I think there'll be more spending on defense and infrastructure, which can significantly increase the national debt, which could run into inflationary problems down the road. So, as an investor in the immediate term, that could cause interest rates to rise because it could cause inflation. So if interest rates rise, then things in the realm of interest income, like money markets, CDs, high interest savings, certain types of bonds could go up. Could possibly be a lot of volatility in the bond market, so that might be somewhere you'd stray from. Then we have fiscal policy, which again is the Federal Reserve, not necessarily the president, who would have to manipulate interest rates based on, are we going to have high inflation? Is what's going to happen in the economy? So you have to really pay attention to the direction. Now, they've already announced that they're going to reduce because the economy is great currently. So they're talking about reducing interest rates. If they do that, then the stock market will jump significantly. Real estate will rebound significantly. But you'll see what we call inflation in the real estate industry, which is good as an investor. You want to buy now and watch it go up. But it will start to make the prices of real estate go significantly higher, which could be a problem for buying down the road in the next 4 years. His immigration policy could create labor shortages, especially in agriculture and construction, in the hospitality industry. So those industries could be significantly affected by immigration and some others, immigration policy. So those may be areas where you'll see inflation, or you might want to stay away from, as an investor. And then really the other thing is the geopolitical considerations. When you start talking about America first and these universal, tariffs and pulling out of old alliances and saying, I'm not going to be there for you, as a military alliance, all these things create geopolitical problems that could then affect trade. It could affect the value of the dollar. It could affect the dollar being used as a reserve currency. It could affect, a whole host of things that would impact the economy. So we don't know the rebound effect, right? We know, again, short-term effect of certain things is great, but you have to have second-order thinking, right? So even something that creates a boon to the economy in the short term could create tragic results in the long term. So you have to pay attention to these things as an investor and adapt and adjust along the way. So again, these are some of the stated, policies in terms of what he has on his agenda. He's not a king, so he can't just pull it off unilaterally. There are other factors that could impact the decision, and the world is dynamic. So some things change. Some things could just be campaign promises and not really be anything in the long run. But based on what has been said, those are some things that you should look out for and what you should do. But again, nobody has a crystal ball. There's no certainty at all. But I'd like to hear what your thoughts are, what your predictions are, what moves you're making right now to prepare for it. But please like, share, subscribe, keep the questions coming, and I'll see you next Tuesday.